Hey, this is Matt from InvestiQuant. Today is Thursday, December 10th, 2020. This morning we saw the markets gap down following that big move lower from yesterday. In fact, yesterday we actually had another outside day, this time a bearish outside day. The day before we had a bullish outside day. Yesterday we had a bearish outside day. Back-to-back outside days are very rare, but we ended up with a bearish outside day where we ended up closing significantly down, and then this morning we gapped lower, actually below yesterday's low, and after a quick test to the downside in the first few minutes, we found some buyers that stepped in pretty aggressively and have pushed back higher. We're holding in the top portion of the range right now and forming some green candlestick on the heels of this bearish outside day. So this afternoon, I figured we would take a look at that pattern and see what has happened historically as we approach the close. So I'm going to look at all four instruments. The setup is going to be a time-based entry that's going to get long near the end of the day. Let's do a little bit earlier today, so I'll do a little bit earlier entry. We'll do 2:30 p.m. Eastern time. It'll be set up as a long, so long 2:30 p.m., exit at the close 4:15 p.m. Eastern time. Now for opening filters, I'm going to use that we gap down. We actually gap down below the prior day low, but since we're using, I'm going to use this outside day pattern that doesn't happen all the time. I want to go ahead and keep this a little bit simpler. That way we keep as many samples as possible. So I'm just going to do gap down here. And the next section, the post open filters section, I'm going to say that we're trading in the top half of the intraday range. So I'm going to grab that from this intraday close versus intraday range. And I'm going to say the intraday close, which is referring to where the price is at the time of the entry. And I've got that set to 2:30 p.m. Eastern time. I'm going to say that is in the top half of the intraday range. Next, I'm going to add some context around yesterday's price action, so that big selling day that we had yesterday. I'll call that a bearish outside day. That is a candlestick pattern, and if I just go over to the active today section, I can grab that right here, bearish outside day from the candlestick section, and then click indicators to put it in a somewhat bullish market environment. I'm going to use above the 200. You know, we closed right around the 10-day moving average, close enough that I'm just going to leave it out. And truthfully, I want as many samples as possible, so I don't want to split this data any more than I have to. So I've got it above a 200-day simple moving average. Now I can hit view results. And here we go. So these are the results of going long at 2:30 p.m. Eastern time, exiting at the close 4:15 p.m. Eastern time when you gap down following a bearish outside day. This has taken place above a 200-day simple moving average, and at the time of your entry, you're trading in the top 50% of the intraday range. So historically, this pattern has 52 samples in the S&P, 52 samples in the NASDAQ, 41 samples in the Dow, and 39 samples in the Russell. So a little bit more samples in the S&P and the NASDAQ than the Dow and the Russell. If we take a look at the win rates on these, you'll see a fairly strong win rate there for the S&P coming in at 71%. The NASDAQ is very similar, 69%. The Dow, the weakest of the group, at 46%, and the Russell about 50-50 there, 51% on its 39 samples. If we take a look at the average win, average loss, looks like the average loss a little bit bigger in the S&P than the average win, so it's got the strongest win rate, but the average loss is quite a bit bigger than the average win. For the NASDAQ has a nice win rate, average loss just a little bit larger than the average win, not sizably. The Dow has the weakest win rate, but the average win is larger than the average loss. And then the Russell with the 50-50 win rate, average win, average loss, fairly similar in size. So for whatever reason, NASDAQ, S&P, both pretty similar in their win rates there, which have favored the upside historically with that pattern, whereas the Dow and the Russell are a little bit more neutral on their win rates, not much of an edge there with that pattern. So hopefully you found that helpful. Good luck today, and we'll see you next time.